The Doc's new investment option.
Lead bullion.
Buy your ammunition from the Doc today at sdbullion.com.
The January 2014 Silver Shield collection is now available at sdbullion.com. 3 new coins join the series, including new strikes and sizes. First, the New Year's coin will mark the end of the Silver Bullet Silver Shield series and the beginning of the new Silver Shield series. Then, the new bullion strike, Bitcoin, graphically shows if you don't hold it, you don't own it. Finally, the new half-ounce Jesus shekel is a bullion strike that tells the story of how Jesus Christ was sold out for 15 ounces of silver by Judas. View the new January 2014 Silver Shield collection at sdbullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us again is one of our favorite returning guest hosts, Turd Ferguson of TF Metals Report. Thanks for coming back and joining us.
My pleasure, Doc. Always fun to visit with you.
Yeah, we always have a good time when Turd's on the show, and it's been too long, so we're glad to have him back. We're getting a quick update on the markets here today. Today, Friday, February 7th, we had the non-farm payrolls report. Another big miss from expectations. I think it came in at plus 113,000 on expectations of plus 180. And the metals, we had actually a little bit of a spike and then kind of a capping action on that. It really, if you look at a 72-hour chart or a weekly chart, the algos ruled both gold and silver, particularly gold, until this afternoon where it kind of broke out to the upside a little bit, closing in on 1270. At Wednesday, Thursday, and Friday's charts pretty much merge into one chart. And the same thing in silver. Really had a tight range in the week. Promising trading this afternoon, kind of clawing its way and holding on to $20 throughout the access market here on Friday. So we'll start with you, Turd. I know you've been pretty bullish about both gold and silver here lately and looking for big things in 2014. Is that right?
Absolutely. And you're right about the action here on this Friday afternoon. I wonder how much of it is tied to the sudden strength in crude this afternoon. I don't know if you guys got a chance. I just noticed before we started visiting. It's back up over 100 and has moved over $1 just since over in the last 2 hours or so here on a lightly traded Friday afternoon. I don't know if who knows what that might be related to, but apparently somebody wants to be long crude over the weekend. So I want to keep our own little headline scanning algos alive all weekend long.
It's a safe haven play.
Yeah, you just wonder, don't you?
Considering how much they beat up gold and silver.
But you're right. It was a very positive trade again today. Today's trade was almost identical to Wednesday when the ADP employment survey came out at 8:30 Eastern, and price shot up, touched the 100-day moving average, and then was slowly beaten back, and today a little more quickly beaten back, and then held in almost a flat line for a while, right up to the 10 a.m. New York time London fix. And once the PM fix was in, then price was allowed to go back up. Pretty remarkable that, all these bubbleheads on TV can talk about, oh, yes, gold not really coming along today, when you and I and everybody else knows, what's really happening in gold and silver. Nonetheless, I think it's a very bullish setup for a number of reasons, and I expect the 100-day moving average in gold to fall as soon as next week. We move through there, and when we'll make a move at the final real resistance point in gold, which will be around 1320. There's a lot of chart resistance at 1320, and the 200-day moving average in the April gold is about 1317, 1318. And that's going to be where the real big fight is. In fact, I was told today, I haven't had a chance to look this up, but apparently even the one and only Jeffrey Christian has even amended his forecast. He was the big bear, a month or two ago, and was telling all of the gold producers that they need to sell forward as much as they can because prices were about to crash. But apparently, Mr. Sister Christian is now saying 1320.
Yeah, I saw him throw out a 13 number. I don't think in 10 years, I've ever seen him give a prediction for gold or silver that is anything above current level of trading.
So even Sister Christian thinks that if he's going to salvage any credibility that he thinks he has left, he wants to get out there and say, no, actually prices are going up. So I feel good. I feel really good about it. I think the open interest picture is bullish. I think the latest commitment of traders information is bullish. And they're pressing on a string at this point, trying to keep price down. And that really only can continue a little bit longer.
He was calling for 1320 within the near term?
You know what, Eric? I haven't tracked down the piece myself. I don't know if that is a year-end number.
It was this year, but yeah, I can't remember the specific time frame, if it was 2 months or 6 months, but it was near term.
Wow.
And I heard another interesting story today. Again, I just haven't had a chance to look this up, but apparently India has, there's a news story out of India today that they plan to install solar power, hopefully throughout all of the rural areas of the country as they try to ramp up. Well, what is the biggest the biggest component of a solar panel? Isn't that silver?
Yeah.
I believe it is.
That might change some of the silver demand picture in the years ahead as well. So anyway, lots of good bullish factors out there. And, price is so disjointed from the physical reality that maybe they'll start to reconnect here shortly. If anything, I feel very, very positive that the double bottoms from June and December were, in fact, the bottoms. And that will make itself apparent to everybody here in the weeks ahead.
Well, Turd, I wanted to touch on a subject here that is near and dear to your heart, and I'm sure you were very excited to see the news last night, was that Blythe Masters of J.P. Morgan, the head of their commodities desk, was reported last night that she was being named to an advisory committee at the U.S. CFTC, famous for Bart Chilton and all of the silver investigations, in a role advising on swaps and swap regulations. And interestingly, not only 12 hours later after a massive outcry on social media, Blythe this morning withdrew herself from consideration from the role. I'd like to get both of your thoughts. Let's start with Turd. What are your thoughts as far as the state of the U.S. markets in general when you have Blythe Masters, who is credited with creating the credit default swap and the derivatives, and putting her in a position of regulating the derivatives markets and the swaps markets in the U.S.?
She wouldn't regulate. She was just going to consult.
Right, consult with the people who are going to regulate.
Right, but she's going to school the regulators how to screw people over.
Here's the only thing we ever had any trouble with. So my advice to you would be to get rid of this part. It'll be, notwithstanding the silver stuff, and I'm going to talk about that, really try to go into some detail into that with some of the folks on my site this weekend. But notwithstanding that, wasn't part of the J.P. Morgan fine structure, the $20 billion or so. Didn't she actually appear before a Senate committee about a year ago and lie? Wouldn't that
not only that, but J.P. Morgan was basically found to be in violation of the law. I wouldn't go as far as to say convicted, because all they did was pay fines, but pursuant to their energy trading manipulation, and Blythe was on the desk of the energy trading.
Mm-hmm.
I mean, she's directly implicated in all of that. It's not a conspiracy theory that the media can trump up and use as an excuse with respect to silver. This woman was directly involved with what is now proven to be market manipulation, and J.P. Morgan basically bought off the regulators by paying a very large fine. I don't remember what it was, but it was in the billions for this particular instance of 17 instances of breaking laws or managing markets or manipulating markets that they've been called on, and actually having to pay fines to settle with. I mean, they're basically admitting that they have done wrong in many instances. I mean, you can quibble about that when it comes to how reporters will deal with it in the press, and they'll always say, well, alleged manipulation, quote unquote, just because fear of lawsuits and what have you. But basically, they were paying off regulators.
For our listeners who aren't familiar with the issue that Eric's talking about, I think it was last summer that the story broke that FERC was settling with for about $500 million over allegations that not only did J.P. Morgan manipulate the energies market, but that I believe that Blythe Masters had misled them in part of their investigation. So there's a lot of speculation towards the end of the summer and the fall that she was actually going to be thrown under the bus by J.P. Morgan for her role in that investigation and
indicted
penalties.
Yes, and indicted. And this then for the CFTC to then say, oh, this is somebody that we want to work with. I mean, it's akin to maybe taking a mafia kingpin and giving them an advisory job at the Department of Justice. It's a mind-blowing thing that, I mean, honestly, I saw the headline yesterday. I thought it was a made-up thing, an onion thing, that
right.
Zero Hedge had picked up. I couldn't believe it. And knowing what I know about the silver investigation and J.P. Morgan's role in manipulating silver, and the CFTC took all of the information they had and swept it under the rug, and stalled and tried to strung it out as long as they could. And then when the news of the whistleblowers really went public last fall, they closed the investigation 2 days later and just shut it down and said, oh, there's nothing here. And then kind of lost in all of the minutiae of that time is then 3 days after that, David Meister, who was the chief investigator for any type of event like that at the CFTC, Mr. Meister, as we called him, up and quit. So, I mean, clearly he was disgusted with what took place. The CFTC covers this whole thing up to make it go away for J.P. Morgan, and then they have the audacity to basically stick our noses in it.
Yeah.
By saying, oh, yeah, on one more thing, hey, we'll just go ahead and we'll just bring Blythe. It is the level of corruption within not only the CFTC, but just with it as an example of the level of corruption that is pervasive through the entire federal government and bureaucracy is staggering. And this is just a perfect example of, frankly, what we're up against in trying to get some changes made.
Yeah, I mean, we don't necessarily look beyond finance to see examples of that level of corruption, but it's everywhere. I mean, in finance, we have that Bloomberg investigation where they filed Freedom of Information Act requests to finally determine that the Fed had used backstops and swaps and so forth to at least the tune of $9 trillion. And, we're talking about a figure that's more than half of the gross domestic product of the United States that basically was created out of thin air to subsidize the banking industry, and that's at the behest of the taxpayers on the hook for that. And then, if you look at other examples and other agencies, the IRS is going berserk and basically being a regulatory watchdog, attack dog for the interests of the Obama administration, and people are getting persecuted by them. Even the FBI is getting in on that. It's across the board. But I found a good Forbes article that will back up what we were talking about with Blythe Masters' respect to the energy manipulation, and I'll just read the headline in a couple of sentences here, because I think it's important to back this up so people realize we're not just pulling this out of thin air. Even mainstream outlets like Forbes discussed this very actively in the summer. J.P. Morgan top executive Blythe Masters dodges penalty as bank settles energy manipulation charges for $410 million. And this was Forbes July 30th last year. And it goes on to detail in great detail all the things that J.P. Morgan was doing when they were manipulating this market. And again, this was something that they settled. And the documentation proving the manipulation was extensive. And it's really just not open for debate what they were doing. And this is their business model. This is what, I don't remember how many cases there have been, but it's in the neighborhood of the high teens that they've been called to the carpet on. They probably will end up having spent in the last 18 months something like $20 billion in terms of paying off the settlement charges, and that's about what they make in net income, quote unquote, with all their games on any given year.
With the backdrop of everything going on with the Masters report, Let's talk a little bit of the trading action here the last couple of months, as I believe, and I think you're on the record as well, that the metals bottomed at the end of June. I think June 28th was the low, the final low, and we had a double bottom in gold a couple months back here on, I believe it was New Year's Eve or the day before.
New Year's Eve, yeah.
To close out 2013 with gold right around 1178 or 1180, and silver didn't quite get back down to 18 the second time. So what's your outlook for 2014 in the metals trading really over the past 6 months, and what it's setting up here going forward?
Well, I think it's going to help. There's a couple of things that are all coming together. First, the massive counterintuitive sell-off that allowed J.P. Morgan to flip a 75,000 contract net short position into a 75,000 contract net long position in gold allowed J.P. Morgan to reduce a short position in silver from 40-some-odd thousand contracts down to 10-some-odd thousand contracts, and allowed them at the same time, I think as Ted Butler has been pointing out, to accumulate maybe as many as 200 million physical ounces of silver. Okay, they've used all of this manufactured weakness to completely flip their positions, and they've driven the speculators now into the short side. It is not the banks that are predominantly short anymore. It is now a lot of these speculators. Price came down. It took them 9 months to pull this off, to get it all the way down and to the low at the end of June. I think it's reasonable to assume it could take 9 more months to get to where everybody recognizes that that is over and that the bottom is in. I was claiming all through December, I think I started with something right around the second or third of the month, that was going to be the low. Everybody was saying 1050, 850, all this stuff, and I said, no, it's not going to happen.
Right.
For a number of different reasons, which I don't need to go all over again here, but price held. Gold is now up from that beat down on New Year's Eve. Gold's up about 7 or 8% and continues to look pretty good. Silver's lagging, but it's fighting a number of different factors, not the least of which all of its main resistance points are all converging between about 20.5 and 22.5. And so there's a lot of interest in keeping price below there, because once it gets above there, it'll be, it'll be clear to Stevie Wonder that the bottom is in. The good news that we got today, I've been watching like crazy every day, the open interest in gold decline. Gold open interest is now the lowest it has been since it was at a multi-year low at the end of September. All at the same time, the open interest in silver is as high as it's been since the lows in late June. And we're able to just kind of break down the numbers inside of there. All the long speculators that entered gold with new positions right after the first year have gotten back out, but price is held in there. So there's a lot of room for speculative hot money to keep pushing gold higher. There's also a lot of room, because the open interest in silver is so high and a lot of spec short there, for a significant squeeze in silver at the same time. So putting this all back together, there are some technical barriers that will be breached that will drive the technical buying. There's a lot of short squeezing to get done. There's just a lot of opportunity in speculators buying. All of that put together should drive price higher and not lower in the weeks and months ahead. The first major stopping point for gold will be around 1320 and silver at about 22. But then from there, ultimately, I think this year we challenge that old floor of 1525, which held for 19 months. And then ultimately in silver, we'll challenge 26. Those moves in their own right would be about 30%. That'd be a hell of a year. And it didn't feel like much from where we've been, in the last few years. But just in their own right, that'd be a hell of a year. I think we're at least going that far. And probably end the year, provided the whole market structure doesn't change and break down. If the market and the COMEX and everything continues the way it is, I think that's at least how far we go this year. But of course, the wild card is always that everything crumbles overnight and gold is actually finally reaches some measure of true value as it relates to a dollar conversion. But I'm not going to say that's coming next week. That's coming eventually. But in the absence of knowing exactly when that's going to be, I'm very bullish and excited about the ending of this corrective phase and where prices are headed from here.
That's a pretty good segue for me to toss out a question I've been dying to ask you for a while. The grand Keynesian experiment coming to an end, and the timeline, and just, how all of the events of the last 9 months, or basically since April, when the step shift of trying to put Band-Aids on the system was gone into high gear, with the April 12 through 15 drive-by shooting and gold, and ever since, pressure being put on India to make sure that their domestic demand didn't crash the system, which it probably would have done. It seems like we're at a more focused period where things are beginning closer and closer to the final end game. I just wanted to pick your thoughts on that question and see what you think.
There's I've told a lot of folks that, they ask me what have I learned the most over the last 3 or 4 years, and it's to not underestimate the power of the powers that be to kind of hold on to power and do everything they can to keep things going. Because I think we all kind of thought, well, 2009 is really going to be the year. Oh, 2010, oh God, it's all going to, and they managed to keep it together. And I think now there's this, especially amongst the status quotients, the people that just think tomorrow is going to be like yesterday, and they all believe that, okay, maybe this, this whole system isn't going to be able to maintain itself, but in the end we'll probably wind it down and we'll come up with something different and all that kind of stuff. We're not in control of that. We being the West, we being the U.S. The masters of the next system, be it the Chinese or some combination of what are currently considered creditor nations, they will be the ones that determine when this happens. They will make their move when they deem it most beneficial to them. If the Chinese determine that they want to begin selling treasuries and roll out the yuan as a reserve currency alternative, if they decide they want to do that on Monday, and they think the best time to do it is Monday, they're going to do it Monday. If they decide the best time is 2016, then the Fed and the EU and all these guys, or the ECB, are going to continue to hold things together with the baling wire and the duct tape until 2016. In the interim, the thing I've said this several times lately on my podcast, if the doc is willing, if you go to the doc's bullion site and he is willing to sell you a gold coin for $1,300 and then ship it to you, he's going to take him up on it, because the day is coming where no one's going to be willing. There's not going to be any gold coins for you to buy.
Yeah, if I can't buy more, I'm not shipping it to you. Yeah,
exactly. So if right now, currently, someone's willing to do that, okay, take them up on it. What we don't know is when, but what I can say with certainty is it's not a function of if. It's not, well, maybe if someday. No, this will occur. But what we don't want to do is go around, like I said, thinking like it was going to be in 2009 or 10, and thinking, well, certainly 2014 is the year. But the year is definitely coming, and we just have to continue to use this time to prepare. Here, I don't mean to keep rambling, but the term I use it with my teenage daughters all the time, is situational awareness. Who survives the plane crash? Who gets out of the movie theater alive? It's the people that are situationally aware, the ones that's, when they got in the crowd, they looked around and went, okay, now if all hell breaks loose, what am I going to do to protect myself? So that when the bad event happens, you're not panicked, and standing on the roof with a sign saying, help me. You knew the way out. You knew how to protect yourself. That's what we do in Turdville. That's what everybody should be doing, is using this time, knowing how the story is going to end, using this time to prepare for when it ends, so that you're ready for it. You take advantage of it. You make the most of it, and you're protected and insured against this coming calamity.
Yeah, absolutely. One of the triggers that I think we need to be on the lookout for is when China reaches 8,000 and some odd metric tons of gold, to equate to what supposedly the United States has, which is another story altogether.
Yeah, and who's to say who's to say they're not already there?
Yeah, exactly. By my back of the napkin calculations, I think that they have at least 7,000 tons, and there are certainly a lot of other people who think way higher numbers. North of 15,000 metric tons. I don't it's just a question of when they are in a position to set themselves as the leader of the next monetary system, and they not necessarily will have to even be the quote-unquote leader. If they have the SDR basket rejiggered so that the yuan has maybe a 20% weighting or something like that, that'll probably be just fine for them, and maybe they'll back their direct trade in addition with gold, and then therefore everybody is going to want to, through Gresham's law, have their monetary assets flowing more towards China and yuan backed by gold.
Yep.
You know, and
that's where we're headed, and you got to use this time to, I mean, it's coming, and it'll be at the time of their choosing, not ours.
Yeah, unfortunately. And that goes back to even the example of Blythe masters and regulatory capture and the dumb F monkeys that are running this government, or running operations in a government with strings attached to them to the banking oligarchy above them. I mean, there's just so many special interests that make the United States like a giant sandbox when it comes to our government and its pursuit of policies that don't serve anybody's interest except for the very elite special interests.
Yep.
And most people don't know this intellectually. They can understand it intuitively, and a lot of people across America really do get that there's this huge thing that's wrong, and they can't quite put their finger on it. But when we look at statistics of how many people own silver and gold in the United States, it's probably only, easily, and I'm speaking physical and GLD and paper gold, it's probably only like 5% if you count the paper products, and only 1% if you think of just strictly physical possession. And that speaks to how dangerous the situation is for average Americans, because most people don't have hedges. They don't own farmland. They don't have real estate that is separated from concentrated markets that will go down if we do in fact have a depression following some kind of financial crisis or what have you. Most people just don't have any insurance that they can wrap around their arms. It's sad.
Yeah, and again, it's the time to purchase the insurance is before the disaster event happens. Once it happens,
right.
You can't purchase it, obviously. We just want to give listeners a quick update on the physical market here in the U.S. before we wrap up the show with Turd. We've really continued to see just substantial demand in both gold and silver, really on the dips below, particularly the $20 psychological level in silver and $12.50 in gold. Any time silver dips down under 20, the big pocketed buyers just step up to the plate and buy. For the last several weeks, every single day that silver is traded under $20, we've had at least one, if not multiple, 6 to 7 figure orders at SD Bullion. And when talking silver, those are large orders, and I mean that's not just a couple of coins. Those are big pocketed buyers who are stepping into the market to allocate a large portion of wealth that they think this is an excellent time to buy. They're not chasing the market like the retail investor that was buying silver at 45 and 50 back in 2011. These people weren't buying then, but at least in that type of volume anyways. So we continue to see that. As far as the supply levels, we're continuing to see the shortage out of the Sunshine Mint in their blanks going to the U.S. Mint, resulting in the U.S. Mint allocation and delays, as well as the Sunshine Mint products. They continue to run about a 4 to 5 week delay on their own generic rounds, which is, until the last few months, pretty unheard of for the Sunshine Mint, the largest private mint in the U.S. Silver Eagle premiums are starting to tick up again. They went up about 15 cents this week, and for the first time since the mint started producing Silver Eagles again this year, the wholesalers are on about a week to 2 week delay now. Some of them are 3 to 4 weeks, but across the board they're about a week or two delay. And even the silver maples pricing is starting to tick up a little bit, and the 90% really, as it's been for the last 6 to 12 months, is scarce to none available. So premiums don't matter much if none is to be found. So silver continues to be tight, but generic bars and rounds can still be found outside of the sunshine products, pretty readily available. So we'll keep an eye on that as, again, if silver can make its way back through 20 and head towards the target Turd's looking for this year of 26. We'll see whether the physical demand increases and we see any type of shortage situation like we saw in the spring of last year, where pretty much all silver products were 4 to 6 to 8 weeks out. There was just nothing to be had anywhere. I think we're all pretty much in agreement here, guys, that we all agree that the bottom is likely, if not definitely in already, and look for big things here for the metals in 2014. And correct me if I'm wrong, Turd, you're looking for the 100-day moving average in gold to fall in the next week or two. Is that right?
It certainly appears like it's going to. Yes, I came on back at the first of the month and thought we'd be to 1320 by Valentine's Day. I need a pretty good rally next week if I'm going to get that pulled off. But yes, absolutely. I think once we get through there, we'll begin to accelerate towards 1320. It'll be about a $40 or $50 move. And then watch the miners too. You know, they've been very strong so far this year. The Hui index is struggling with its 100-day moving average. It's been fighting and riding that thing for about the last 2 weeks nonstop. But if it can draw away too, it'll make a move towards its 200-day moving average, and the two will kind of feed off each other, and obviously drag silver along too. So hopefully that move will show itself very soon. Very soon.
All right. Well, before we wrap up here, Eric, I was just going to let. Do you have anything else to add? I was going to let Turd give the listeners a little bit of info about the excellent guests he's been having on his podcast and subscription service, and as well as his market updates. Anything else you want to add, Eric, before we let Turd give the listeners a little bit of?
Sure. For our listeners' understanding of what Turd just discussed, it's important to keep in mind that when money flows into the mining shares, it's usually more longer-term money. People, after having seen 2013 and the miners being beaten to a pulp, are positioning themselves, and these are, to a large extent, smart money, institutional money, and people with deep pockets who have just been sitting on the sidelines, biding their time, and now that they're moving into the precious metal space, you see a more concerted shift, and it speaks to the psychology shift that's going on in this space that happens in the background. We have the manipulation on a weekly and daily basis many a time, and it makes a lot of noise, and people focus on that, and it gets a little confusing sometimes. But when you look at the 50,000-foot perspective and you look at miners as an example, that's what that information is worth. It tells you that when it comes to the people who are not going to be pushed around when they make their investments, certainly not this time of year, they're making the longer-term plays, and that speaks to the a view that the mining sector and gold and silver in particular have bottomed. And we got a lot of fundamental issues that are just aligning perfectly. I mean, even India at this point is talking about cutting back on a lot of their restrictions starting sometime in March, and that probably will happen because there's a shift in political attitudes there and new party coming in and so forth. So just wanted to underscore that for the listening audience because it's really important.
Right. All right, Turd, well, before we wrap up then here, tell the listeners about some of the excellent guests you've been having on your podcast channel and how they can get access to that information.
Well, thanks, Doc. And I want to second what Eric said. That was a great point, Eric, and thank you for pointing that out. That's something that people really need to be aware of. That's right. On my site, it is still, on large part, just a free internet site with bulletin boards and forums where traders congregate and talk about what they're doing, and there's usually a couple of posts a day that anybody can read and comment on. But if you want to go into greater depth, talk about some of my price forecasts, podcasts that I do at the end of every day that kind of wrap up all of the events of the day, and then once a week we have an online webinar, usually with some kind of metals blogosphere guest. All of that, to take that to the next level, is a whopping $10 a month. Not designed to break the bank, just designed to pay the bills and help us with the server costs and keeping the site up and that kind of stuff. So for a small subscription fee, you can get a little greater detail and interact at a different level. So I invite everybody to check it out, tfmetalsreport.com. and come join the fun.
All right. So tfmetalsreport.com. We also highly recommend listeners check it out and get access to all of Turd's in-depth information. Well, once again, Turd, we really appreciate having you back. It's always great to have you back and get your perspective on the metals and the markets and the trading action and where we're going. So thanks again for joining us, Turd.
My pleasure. Hopefully next time we get together, I'll look like I knew what I was talking about and not look like an idiot because price is actually $800 or something. Let's hope this all works out.
All right. So once again, thanks for tuning in to the SD Weekly Metals and Markets.
The Doc's new investment option,
Lead Bullion.
buy your ammunition from the Doc today at sdbullion.com.